Hi, in this class I'll teach you accounting for share capital. So first of all, let's understand what a company is. So a company is a artificial person, and the capital of a company is contributed by many people, mostly a large number of people. For example, Reliance has 600 crore equity shares which are owned by lakhs of the people. So here a lot of people contribute the capital of the company, and all of them cannot manage its affairs, so they elect board of director to manage the affairs of the company. So board of director elected by the shareholder manage the affairs of the company, but board of director cannot manage the affairs as per their own wishes. They have to follow the rules of the Companies Act 2013 to govern or to manage the affairs of the company. So if they'll have to have a contract, or they'll have to do certain things, like they'll have to follow simply the affairs, simply the provisions of the Companies Act 2013. So any contract, any agreement, or any other thing which is not in accordance with the Companies Act 2013 will be void, and board of director cannot do that. Next, a body corporate or a company has a separate legal entity which is distinct from its member. So a member is not liable for the act of a company, and similarly a company is not liable for the acts of its member. Let's understand the features of a company. First, body corporate. A company is incorporated under the Companies Act 2013 or any other act which were previously in force. So for example, Reliance is an old company, and which was incorporated under the Companies Act 1956. And there are even Companies Act previous to 1956. So even an older company would have been incorporated under those acts. So there is an exception, like banking and insurance companies are not incorporated under the Companies Act. They are incorporated under the different laws which are applicable to them. A company have a separate legal entity distinct from its members. So member are different and company is different. A company is not a group of its member. It has a separate legal entity in the eyes of a law. It's an artificial person. It has its rights and liabilities as a normal person. Then next is limited liability. So member have a limited liability. So they are not ultimately or unlimitedly responsible for the liability of its of their company. Their liabilities is limited to the unpaid share capital if the company is limited by share, or the amount of guarantee given by them in case the company is limited by guarantee. Next is perpetual succession. A company can only be terminated by law. It doesn't impacted by the death, insolvency, or insanity of a member. If a member dies, or he becomes insolvent, or if he becomes insane, it does not affect the company at all. A company will only be terminated by law, and unless it is terminated by law, it will continue. So it has a perpetual succession. Perpetual here means forever. The next is common seal. So common seal is its official signature, because the company is an artificial person. It cannot sign any document. So all the documents should have or should bear the official seal of a company. If a document doesn't have the common seal of a company, that document is invalid, and the third party or any other person cannot enforce that document against the company. So share of a public companies are freely transferable. There is no restriction on their these transfers, except a few which you will study in higher classes. So for example, I can buy any number of Reliance share and can hold them forever, or even I can buy today, sell tomorrow, or I can hold them for a month or 3 months, and so on. So there is no restriction as such, except yes, there are certain restriction for promoters and for insider information holders, but as such there is no restriction on the transferability of shares to a general public. If a company enter into a contract by a third person or its member, and if there is a breach of contract by either party, the company can sue that person, or it can also be sued by the third party or its member. For example, if there is a breach of contract by the company, a member or any other third person can sue the company. Similarly, if there is a breach of contract by the third person or its member, the company can sue its member or the third party. The members are not affected. So if there is a breach of contract, the third party cannot sue its member. It will have to sue only the company, because company has a separate legal entity, and members are not responsible for any wrongdoing of a company.